Alright guys, I hope you hear me loud and clear now. We had some technical issues, but we on it. We on it. Är du med? Musiken?
Nej.
What?
Jo.
Hör du?
Ja.
Bra eller?
Ja, natur.
Alright, it's good. Let's do this.
Let's go.
Let's go. Alright people, let's jump into the markets. Markets are open. Perfect. Love it. 9 o'clock CT. 8 o'clock UK time. 8 a.m. For everybody that's up early. Gotta have your coffee ready. Important. So, Friday. Always a slow day when it comes to trading. Always a slow day. 1 second. Yeah. Friday, always a slow day, but we'll see if we can find something anyways. We had a very interesting development of gold yesterday. Let's go back. Let's go to gold. Let's watch gold. There it is. So, I don't know if you guys remember. You know what I'm gonna do? I'm gonna take away this fibs. Let me take away this one as well. Yeah, that is good. So, yesterday, if you remember, I said that gold needs to come down and clear the liquidity here. Wait, let me make this bigger so everybody can see. Gold needs to come down and clear this liquidity that occurred. A lot of buy orders there and sell orders stuck. A lot of sell orders stuck due to the news that came out on Wednesday from the FOMC meeting and from the FOMC conference, press conference by Jerome Powell. And we had a big market pump, but always when market comes up that fast, there's a big chance it's coming down equally fast. And that's what we see now. So, market came down, but when it came down, same thing happened. A lot of liquidity stuck here. A lot of liquidity stuck here now. So, liquidity here. This one is clear now. So this liquidity got cleared when the market came down here. And if you remember yesterday, I said something like, I expect the market to come down all the way to the demand zone. The Fibonacci 78.6 to 88.6 is the demand zone. And why I use those levels is because I know for a fact actually that most of these institutional bots trading that trade 65 to 80% of the market used these levels. So this is the demand zone, a lot of demand here, and market came all the way down here. And if you remember, if you were on the stream yesterday, then you remember that I said it actually, that I can expect the market easily to come down to the sweet spot zone right here, this yellow zone, or all the way down here. So we're here now. What does that mean? Well, that doesn't mean much. That means that we cleared the liquidity here as well. I think we're 50% in on this one. Let me just first, let me do like this. I'm gonna box in this demand zone so we know where it is. We want it red. We want it like that. More transparent. It don't need to be so colorful. Perfect. Thank you. Remove this. So the red zone here is the demand zone. Now, let's see what's going on here. Okay, nice. Now, this zone here had a lot of liquidity. That liquidity was stuck. And I'm looking for the 50% zone. So this is the 50% from this this gets a little bit more complicated because it's for traders that have passed the basics and are getting more into advanced stuff now. But I'm gonna break it down quick if maybe we got some more experienced traders here watching this. So you see this wicks just before this big drop. So the bottom here, this wick to the wick here at the bottom, when the market reversed. That's where most of the liquidity will be. And market needs to pass pretty much 50% of this. Like a easy rule to use is to use the 50% mark. So 50% of this liquidity zone is what the market needs to pass to clear the liquidity in here, all right? And 50% is here, as you guys can see. Here's the 50%. So that's the yellow line. So it has cleared it. And now you see that the 61.8 is acting as support. And it's retesting it in this moment. So getting back to the bottom of this, actually pulling this one. Let's see what we want to see. Yeah, very nice. Okay, but that is not relevant right now. We want to see what's going on here. So we're in the red zone, as we said before, in the demand zone. But what is going on here? Okay, you guys see this? You guys see this? So market has come down and it's retesting the 127.2 Fibonacci extension as support. Now, this retest is so nice and it's inside the demand zone. Most often when the market comes down to the demand zone, what happens is it picks up supply from there, it picks up orders from there, and then it goes up. Most often, not always. Now the market has come down to the demand zone, but also it has almost not just a couple of pips shy hit the 127.2 Fibonacci extension from this last swing that I pulled from this bottom to this top. Okay, and then it made a fake out kind of and came back down. So this is a retest of the zone. Now, what we want to see now, what we'll be looking at, and what you will notice in the Telegram chat, in the Telegram channel, is that we will look for what will happen down here in this zone now. Will we break through the zone, look for possible sell, or will we actually see strength here? Buying orders coming in, buying volume. That will mean that we have a possible buy on our hands, a buy entry. And, yo, guys, I hope you're there. I don't know what happened. Yeah, I think we're there. Yeah, we're live. Good. I don't know what happened. My streaming software just shut down from nowhere, so I'm sorry for that. Anyways, what was I saying? I was in the flow. Yeah. So we want to see the market come back down here, and we want to see how it treats this zone, this area. I'm gonna make that area green. And less transparent. All right. So the buy area is, I would say, somewhere around here. Let's look for what's happening, what will happen, and that, like this whole thing, what you see here will play out in the coming minutes or maybe hours, maybe. But I would say in the coming hour, this will play out. So let's go to the 50-minute time frame. And what we then see is we are beneath 20-day EMA, which means that, yeah, so basically the market, if it comes down here again and shows us confirmations of entry for a buy, then we want to see market break through the 20-day EMA because we know that gold tends to respect it on the 50-minute time frame. Let's look on a 5-minute, same thing. 1 minute, same thing. Okay, very nice. So market come down here, show strength that it wants to pull up. We want to see buy orders come in, buy volume, and then we will enter a buy. So you guys keep you keep your eyes open on the Telegram channel, and we will see, and you will see when I send out the signal there. And I have to say it also, I'm not. This is not financial advice. This is only my own opinions and my own analysis and thoughts of what I'm seeing in the markets. All right. Now, if we go up here, which I really think we do, where are we going? Well, we need to go quite a lot, you know. So we got a very nice buy here because we got, what do we got? We got liquidity stock. Wait, let me just pull this liquidity stock from here to here. This means all of this that you see here with white, so it differentiates from the other ones. Everything in this white zone is liquidity stock. And if you remember from the example down here I showed you, we're looking for the 50% in this liquidity. Straight off the top, from looking at this, I'll say the market will come in to the sweet spot zone. So I think it will touch the 61.8% retracement, and from there we're gonna have to make new analysis and new decisions on where the market is going. But I see this market bouncing from here and coming back up and coming here and clearing this liquidity. Now, to be more precise, remember that what I did with the 50%. So in this liquidity zone, you want to look for the 50% mark. That means the middle. Where's the middle of the liquidity zone? The middle is here, 50%. So let's pull a line there because that marks the middle of the liquidity zone, and that marks where we should go at least in this pullback here when market comes up to clear this liquidity. I can pull this one up here to the 50% as well, like that. Let me take away this fib now. So that's the 50%. The orange line, I'm gonna actually change it. I'm gonna make it white, like that. Perfect. Yeah, perfect. And now back to the fib again. From this top to this bottom. Let's say this is the bottom. Same thing here. Even at this big move that you see here. There's my marker here, my highlighter. So even on this big drop that you see here, the 50% conflues perfectly with the 50% from this liquidity zone, this gray liquidity zone that you see here. So this is why I see the markets, if we see support now, if we get confirmation now that we get a buy from here, then I see the markets coming down at least here, touching this for either retest, breakthrough, and continue up, or retest and then a rejection and down. So that decision is going to have to be made when the markets are here. We're going to have to see how it reacts. If we have any fundamentals giving us a buy or sell bias, and so on. But that is what I'm seeing for now. So we leave and go with that. We waiting for the entry. We're waiting for market to confirm entry for us at the zone. We want to see, for the market to confirm entry for us, we want to see strength. The first sign of strength that we're going to see is this here. We want to see the market. Now we're on a 5-minute time frame. We want to see the market get above this 20-day moving average, this 20-day EMA, get above it, show strength that it want to stay above. That's when we enter. So when we trade, as I've said before, for you guys that have been on these streams for a while, you know, I'm always saying, let the market come to you. Attract it. Let the market come to you. Don't chase the market. Just like a girl. Let her come. Don't chase her. Girls don't like that. So the markets don't like that either. Money don't like that either. So just be attractive for the market. Find zones where you see like that's a zone where the market should come to. Like we found a zone now, right? And then just wait for the signals, for that little flirt from the girl, so that you know now it's time to hit. Now it's time to do your thing, you know. So our first signal is the break of the 20-day EMA. Another confirmation that I see now, I have the volume profile on and removing all of that so that we can, yeah. Pulling volume. The volume profile shows you where the most volume is in the market right now, or where it's been, and it's going to show you where the most volume is from what is visible on the screen. So now this volume that it shows you here, this blue and yellow, I don't know what to call it, things, they show where the most volume is, and they show where the most volume is from what's visible on the screen. And you guys see directly that most volume is stuck down here. Market has come down here and it has consolidated for a while. All right. So it has you had 1911 US dollars has acted as support. It was trying to fake out a little bit. It's not even a fake out. Sellers were trying to push the markets down. It didn't work. And buyers are trying to take control of the market now. Now let's see if they break the resistance that we have here at 1918, which conflues perfectly with where this whole liquidity zone starts, right? There's a lot of things to look at. I hope I'm not getting too complicated. So to break it down simple, get back again, we're looking for the 20-day EMA to be breached by the market and see strong candles close above the zone. With that said, we're leaving this for a while now. I'm going to put an alarm here just to be ready, just to not be caught off guard here. So, and with that said, we're going back to Euro USD. Euro USD. Now, I'm going to be frank with you guys. I was busy yesterday night and I totally lost this trade. We had a very nice trade here. Like, if I would be watching the markets when this happened here, I would call this sell. You know why? Because when the market came back down, and I said it, this is why this one was here. Because in this live stream yesterday, I said it that we have a possible sell here. Market passed it and came back down. But when it came down with a lot about volume. So seeing that, we would have known that the market would continue down. Now, do we still have a sell here, a possible sell? Yeah, we have it, but I'm not sure of it. As I said before, it's Friday, markets are slow. So, what does it mean? Markets are slow. There's not as much volume in the markets. So volatility is much lower, and in the same time, it's much easier to manipulate the markets when the volume is low. So let's see if we got something on Manera. We're leaving this one for the minute. I'm gonna take a deep look into it later, and if I see something, I'll call it out in the Telegram channel, in the signals channel. But for now, we'll leave it like that. Now let's see what we got on Monero. Monero is our favorite friend, our best friend. Do we see some attractive patterns here that we can use? All right, let's start from here. So USD CHF is in the entry zone. Now let's go to the Forex factory and see if we got some news for US today. Oh yeah, we got a lot of news. Oh man. All right, cool. Guys, sorry man. We have some technical issues. I hope, yeah, we're good again. Okay, cool. So back to where I left off. We have a lot of news for USD today, and CHF also. The Schweiz francs CHF also has orange folder. Orange folder is not as critical as the red folders, but still low. It needs to be. It's important to keep an eye on that. Government board member Mechler speaks. Okay, cool. Um, Non-farm employment change, unemployment rate. All right, cool. So these news will be dropped. This is Eastern time, so these will be dropped at what will it be? Yeah, 2:30 afternoon, European time. I don't know where you guys tuning in from, but looking at Central European time, it's about 2:30, I would say. With quick calculations. Change in the price business release monthly. This is earliest date. It's okay. So this is gonna be interesting. So look, we have a forecast on the average hourly earnings. The forecast is 0.3%. Now, if greater than forecast, so let's say they announce 0.4%, what does that mean? That means that the US dollar will pump, it will go up. If it's not already priced in, which I don't think. So then we go into the Dixie, the dollar index, and we're looking at it. And if this one pumps, this is important now. Let's go to a bigger time frame. If this one starts to go up, what happens with gold? Gold starts to go down. Same thing with Bitcoin, and same thing with a lot of other commodities and also forex pairs. For example, the Euro USD. Euro will go down, which I'm seeing it doing. A sell. Gold, nah, I want to see it clear its liquidity first before going down, but it might just drop right, straight through and go down. So we need to keep a very close eye on the news. I will try to be, um, I will try to be, keep an eye on it so that I can alert you guys in the Telegram channel. If you're not in the Telegram channel, link is below. Jump into it now so that you're there taking my trades that I'm sending out and also information and market news. Let's go back to Forex Factory. I want to see something quick. Trading, day trading is normally 20% fundamentals, 80% technical analysis. Now, but the thing is, that's how it's always been. But nowadays, like the last, I wouldn't say year, it's become like 30-40% fundamentals because we have had such major fundamental happenings, and those have affected the market so much. But normally, when you don't see major news, black swan events and stuff like that, you can count 20% fundamentals, 80% technical. So, in other words, if you're very good, if you're skilled and disciplined, focused technical trader, you can manage to profit from the markets just by being just by doing technical analysis. Now, from those 80% trading, so 20% is what? Fundamental, 80% is technical. Now, from that, 80% is mindset, 20% is technical knowledge about trading, knowing different strategies and stuff. So 80% is mindset. You gotta be disciplined. Sorry for cursing, but you gotta be disciplined as fuck, and and you gotta be patient as fuck as well. So you gotta train your mindset. So if you're a good forex trader, if you're a good day trader, you will automatically be good at many other things as well, because that will get you disciplined, focused, patient, very patient. You gotta have an emotional IQ way above, because you cannot react emotionally to the markets, to what's happening, to what's going on in the markets, and that no matter what, no matter how professional, no matter how good you are, you will always react emotionally, more or less. So, but the challenge for you is to do it less, to start becoming, to be more patient just in your trading, and be very disciplined. Stick to a strategy, and just do what your strategy says to do. And if the strategy doesn't work, you tweak the strategy so it becomes better. But you stick to the strategy always when trading. So, with that said, Manara gave us USD CHF. We see a nice sell scan and seen by Manara in the markets. What Manara is, for you guys that don't know, it's an AI tool. It's an AI tool that scans the market for different types of patterns. So you will see different types of patterns, different types of trade opportunities that Manara sees for us. And it's an incredibly good tool. It's my favorite thing to use in trading. I know a lot of other professional traders, high-level traders, they 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 cling to Monero a lot, because it's your perfect assistant. Instead of jumping into the market and look for different types of patterns, I jump into Monero and see what pattern it has found for me, and then I use those patterns as confirmations for my own trades. So when I see this, I don't jump into a sell here directly. We take, okay, let's do this. USD CHF. Nice. We saw the news. We have news waiting, so I'm not sure that I want to even touch this market, but let's do this for practical case. So I see this is a sell, and the sell entry is at about 0.9167. All right. USD CHF. Oh, alarm is triggered. Okay, cool, nice. But first we gotta finish this. USD CHF. Let's go to my Forex list. USD CHF. Let's see what we got. There it is. Now, let's clear some of these drawings. Let's make it, keep the chart as naked as possible. Clear this one also. All right, so USD CHF. Monero tells us entry is at 0.9167. 0.9167. That is here. Basically where we're at now. That's the entry for sell. Okay? According to Monero. Now, with that said, let's go to our favorite tools. Start with Fibonacci. That zone is inside the supply zone. This red zone that you see here between the 78.6 and the 88.6 Fibonacci retracement is the supply zone for this drop that we saw here, okay? For this drop. So, this level puts us directly inside the supply zone, and having 88.6 as a resistance, basically, which it often acts as. So, and let's see on this whole swing, on this whole sequence, what we got. Well, we got nothing. That puts us in the middle of nowhere. So To be honest, I don't see the sell from this zone. I see the sell coming from at least 91, 0.9174. At least, if there even is a sell here, because we got liquidity stuck here. I think I can easily see the market coming up, clearing this liquidity. This red candle, a lot of liquidity. So, in other words, I don't see the sell. So look, what did Manara tell us? It's a sell here. Maybe it's right. It's a very good, it's a nice trade opportunity, but it didn't conflude with our own strategy, with our own confirmations. So we ain't taking that sell. And this is the important thing. This is what I want to show you, that you can have tools like Manara, for example, that is exceptional, but you don't trust it blindly. Just you got to know your basics. You got to know your trading. If you don't know, stick to my live trading sessions, and you will know. You will learn. So I see this coming in at least to the 50% retracement, just touching the sweet spot at least before coming back down. But to be honest, I see coming all the way to the 61.8 Fibonacci retracement from this sequence, from this drop that we had here. So because when it comes to the 61.8, what happens is it clears the liquidity that we have stuck here in this zone. That was just a quick lesson and a little market analysis. I'm gonna leave these drawings here. So guys, with that said, I have to go and hit the gym actually. So I'm signing out from here. Me and Daniel signing out for this week. I hope you guys had a good week, great week. Stay blessed.